Have you ever thought that leaving your money in the bank might be one of the worst financial decisions you could make? It's shocking, but the truth is that inflation silently erodes the value of your money, and the interest rates offered by banks rarely keep up with this devaluation. The result? Your purchasing power decreases every day. But don't worry, there is a solution. There are smart assets that not only protect your wealth but also make it grow. Imagine having investments that increase in value instead of withering away in the bank. In this video, we will reveal the 11 safest and most profitable assets for you to invest in 2024. Get ready to discover alternatives that the wealthy already know and that can transform your financial life in a surprising and quick way. 1. Banks and cash erosion. Banks are masters at selling the idea that saving money is safe and profitable. They promise interest rates that seem attractive at first glance. However, what many don't realize is that inflation is always one step ahead, silently eroding the real value of the money saved in the bank. Imagine this as a marathon where money always loses to inflation. Keeping your money in the bank is like running in place. Many experts advise diversifying investments, but few people truly understand why. The money that sits idle in a bank account is subject to constant devaluation, while assets like gold, real estate, and stocks have the potential for real growth. For example, investing in shares of solid companies or in real estate investment funds can bring more substantial returns. Alice, a friend of mine, saw her wealth grow significantly by investing in value stocks and mutual funds instead of letting her money stagnate in the bank. Another crucial point is the interest rate that banks offer. It generally doesn't keep up with inflation, resulting in a loss of purchasing power over time. It's like trying to fill a leaky bucket. You put money in, but it slowly drains away. Many have realized that to protect their wealth, it's essential to seek investment alternatives. The good news is that there are better and safer assets than money in the bank, and exploring them can be the key to achieving true wealth. 2. Precious metals. Precious metals like gold, silver, and platinum have always been considered stores of value in times of economic uncertainty. They not only maintain their value but often increase during periods of inflation, making them a smart choice for those looking to preserve and grow their wealth. Gold, for instance, has a history of appreciation that spans centuries. Gold is expected to increase significantly in the next decade, making it an even more attractive asset. Investing in precious metals is an age-old strategy that remains relevant today. Unlike money that loses value due to inflation, these metals maintain their purchasing power over time. Imagine having invested in gold 10 years ago, its value would have increased substantially. This makes precious metals an excellent option for those seeking long-term security and appreciation. In addition to gold and silver, platinum is also a valuable investment, especially for its industrial applications. These metals are more than just stores of value, they are tangible assets that do not depend on government decisions or monetary policies. John, an experienced investor, has always included precious metals in his portfolio, and this decision has helped him weather several economic crises without significant losses. 3. Industrial commodities. Industrial commodities like silver, cobalt, and copper are vital to the functioning of the modern global economy. These materials are essential for manufacturing a wide range of products, from electronics to electric vehicles. The demand for these commodities continues to grow, driven by technological innovation and the transition to more sustainable energy sources. Investing in mining companies or funds related to these commodities can be an excellent way to diversify your portfolio and achieve significant returns. For example, silver is not just a precious metal, it is also a critical component in solar panels and electronics. The growing demand for green technologies ensures that silver will continue to be valuable. Investing in shares of silver mining companies or funds focused on this metal can offer a lucrative exposure to this essential commodity. It's like having a piece of the future in your portfolio. Another example is cobalt, which is crucial in the production of lithium-ion batteries used in electric cars. With the automotive industry rapidly moving towards electrification, cobalt is becoming increasingly valuable. Mary, a smart investor, decided to allocate part of her resources to companies that extract cobalt and saw impressive growth in her returns. This demonstrates how industrial commodities can be more profitable than simply leaving money in the bank. 4. Safe haven currencies. Investing in safe haven currencies like the Swiss franc is a wise strategy for those seeking stability in times of economic volatility. These currencies are considered safe havens due to the economic and political stability of the countries that issue them. Investing in currency ETFs is an accessible way for small investors to gain exposure to these stable currencies without needing to buy physical currency. The Swiss franc, for example, is widely recognized as a safe currency. During global financial crises, many investors transfer their assets to the Swiss franc to protect their wealth. Investing in a currency ETF that tracks the Swiss franc can be an effective way to add a layer of protection to your portfolio. This is especially important when other countries' economies face uncertainties and fluctuations. Besides the Swiss franc, other currencies like the Japanese yen and the Singapore dollar are also considered safe. Investing in ETFs that include a basket of these currencies can provide additional diversification and reduce risk. Think of Sarah, a cautious investor, who chose to diversify her investments with safe haven currencies. This decision helped her protect her portfolio during periods of high stock market volatility. 5. Sovereign guarantees. Sovereign guarantees or government bonds are considered extremely safe investments because they are backed by the full faith and credit of the issuing government. These bonds offer a way to earn stable returns without the risk associated with other investments. Compared to money in the bank, government bonds often provide better yields, especially in stable economies. Investing in government bonds can be a smart strategy to preserve and grow wealth. For example, U.S. Treasury bonds are known for their safety and stability. Many investors prefer these bonds during periods of economic uncertainty because they offer reliable fixed income. Additionally, Treasury bonds can be purchased through mutual funds or ETFs, making them accessible even to small investors. Imagine having part of your portfolio in government bonds and benefiting from security that money in the bank cannot offer. In addition to U.S. Treasury bonds, bonds from other countries with strong economies like Germany or Japan are also attractive options. Investing in bonds from stable governments can provide a steady and reliable return, protecting your wealth against inflation. George, a prudent investor, always kept a portion of his portfolio in sovereign bonds, and thanks to this, he managed to maintain his wealth even in times of economic crisis. 6. Value stocks and mutual funds. Value stocks and dividend-focused mutual funds are an excellent way to achieve stable and long-term returns. These stocks represent solid companies with strong financial fundamentals that usually pay regular dividends. Investing in value stocks can be less risky than investing in growth stocks, and the dividends offered can provide a reliable passive income. Companies like Coca-Cola and Johnson & Johnson are examples of value stocks that have historically offered stable returns. Investing in mutual funds that focus on dividends is another effective strategy. These funds are managed by professionals who carefully select dividend-paying stocks, providing investors with a regular income source. Additionally, mutual funds offer diversification, reducing the risk associated with investing in individual stocks. Marie, a novice investor, chose to invest in a dividend mutual fund and saw her portfolio grow in a stable and secure way. These investments are ideal for those seeking a more conservative approach and wishing to avoid extreme stock market volatility. By investing in value stocks and dividend mutual funds, you are building a solid foundation for financial growth. This type of investment not only protects your capital but also offers the opportunity for consistent gains, something that money in the bank cannot provide. 7. Real estate. Investing in real estate is one of the oldest and most proven ways to build wealth. Rental properties and real estate investment trusts, REITs, offer accessible and effective ways to benefit from the real estate market. Real estate not only provides a source of passive income but also acts as a hedge against inflation. The appreciation of real estate over time can provide significant returns, far surpassing the yields from leaving money in the bank. For example, investing in a rental apartment can generate a stable monthly income. Additionally, the property tends to appreciate over the years, increasing the investor's wealth. Alternatively, REITs allow smaller investors to buy a stake in large real estate ventures, receiving a share of the profits without the need to manage properties directly. This offers a practical and less burdensome way to invest in the real estate sector. Another benefit of real estate is the ability to use financial leverage. By financing the purchase of a property, it's possible to maximize returns on the initial investment. Jack, a real estate investor, used this strategy to acquire several properties and build a robust portfolio. With a careful approach, he turned his savings into a steady stream of passive income, demonstrating how real estate investment can be more advantageous than simply leaving money idle in the bank. 8. Collectibles. Collectibles like vintage cars, rare artworks, and limited edition products are investments that can significantly appreciate in value over time. These items are not only pieces of historical or cultural interest, they are also tangible assets that can offer great returns. Platforms like Whatnot allow investors to buy and sell collectibles, often with fractional ownership options, making this market more accessible. Investing in collectibles requires knowledge and passion for what you are acquiring. For example, a well-preserved classic car can appreciate significantly. Tom, a vintage car enthusiast, bought a 1965 Mustang 10 years ago, and its value has tripled since then. Similarly, artworks by renowned artists or limited edition pieces from famous collections can offer impressive returns, surpassing the yield of any bank account. The key to successful investing in collectibles is thorough research and understanding the specific market. Rare and well-preserved items tend to be the most valuable. Investing in platforms that facilitate buying and selling collectibles can be a practical way to start. Sarah, a longtime collector, used Whatnot to acquire limited edition pieces that appreciated considerably, showing how this type of investment can be a lucrative alternative to money in the bank. 9. Cryptocurrencies. Cryptocurrencies have emerged as an innovative and highly lucrative asset class. Bitcoin, Ethereum, and other digital currencies offer investment opportunities that can provide substantial returns. Despite the volatility, the cryptocurrency market has attracted investors due to its potential for explosive appreciation and decentralized nature. Investing in cryptocurrencies can be an intriguing alternative to money in the bank, especially for those willing to tolerate a certain level of risk. A notable example is Bitcoin, which in just over a decade has gone from an obscure idea to a valuable asset, accepted by major companies and financial institutions. Buying cryptocurrencies can be done safely through platforms like Coinbase or Binance, which offer storage and trading services. Laura, a visionary investor, bought Bitcoin when it was still traded at low prices and saw her investment multiply several times, illustrating the impressive potential of this market. Besides Bitcoin, Ethereum offers a vast ecosystem for smart contracts and decentralized applications, attracting developers and investors. Cryptocurrency funds and ETFs that track the performance of major digital currencies are options for those who prefer not to deal directly with buying and storing cryptocurrencies. Investing part of the portfolio in cryptocurrencies can be a way to diversify and potentially achieve high returns while preparing for the digital financial future. 10. Technology investments. The technology sector is constantly evolving and offers some of the most exciting and lucrative investment opportunities. Innovative companies leading in areas like artificial intelligence, biotechnology, and renewable energy are transforming the world and providing impressive returns. Investing in technology company stocks or technology funds can be a way to capitalize on this explosive growth and diversify your portfolio smartly. For example, companies like Apple, Amazon, and Tesla have not only revolutionized their respective industries but also provided exceptional returns for their investors. These tech giants continue to innovate, creating new markets and expanding their operations globally. Jill, a shrewd investor, allocated part of her resources in shares of these companies and saw her portfolio grow exponentially, highlighting the potential of this sector. Besides the tech giants, startups and emerging companies in innovation areas also represent exciting investment opportunities. Investing in technology ETFs, which include a diversified basket of tech stocks, can provide exposure to this dynamic sector without the need to pick individual stocks. Technology investment not only protects against the devaluation of money in the bank but also positions the investor to benefit from future trends and technological revolutions. 11. Sustainable investment funds. Sustainable investment funds, also known as ESG, environmental, social, and governance funds, are gaining popularity among investors who want to align their personal values with their investment strategies. These funds focus on companies that adopt sustainable practices, promote social responsibility, and maintain robust corporate governance. Investing in ESG funds not only contributes to a better world but can also provide solid financial returns, often surpassing traditional investments. Companies that are leaders in sustainability are generally more resilient and adaptable to changes, making them good long-term investments. For example, investing in funds that include renewable energy companies like NextEra Energy or clean tech companies like Tesla can be an effective way to capitalize on the global transition to a more sustainable economy. These investments not only help protect the environment but have also shown impressive growth. Moreover, sustainable investment funds are available in various forms, including ETFs, mutual funds, and even index funds. This makes it easy for investors of all sizes and experience levels to access these opportunities. Karen, a conscious investor, chose to invest in an ESG ETF that tracks companies committed to sustainable practices and saw her portfolio grow while contributing to important causes. This type of investment can be more rewarding and meaningful than leaving money idle in the bank. ESG funds also tend to benefit from favorable government policies and a growing public interest in responsible business practices. This creates an environment where sustainable companies have a competitive advantage, which can result in robust financial returns for investors. Therefore, when considering where to invest your money, sustainable investment funds offer not only an ethical but also a financially advantageous alternative. Now that you know these 11 smart assets, it's time to act. It's not enough to just know where to invest, it's crucial to apply this knowledge to truly transform your financial life. Which of these assets caught your attention the most? How about starting to explore a new form of investment today? Remember that every decision you make can bring you closer to the financial freedom you desire. It's time to step out of your comfort zone and stop blindly trusting the bank. Think about the possibilities. Your money can grow in value, protecting itself against inflation and generating substantial returns. So, are you ready to make this change? Share your ideas and questions in the comments. Let's continue this conversation and learn together. If you enjoyed this content and want to keep receiving valuable tips to improve your financial life, subscribe to the channel and turn on notifications. This way, you won't miss any new videos and will always stay on top of the best investment strategies. Let's embark on this journey toward prosperity together.